Has your business doubled prices in the last 10 years? Well, it turns out Netflix has, and their strategy of raising prices, creating a great product, and driving revenue and sales has everything to do with how they're able to afford doing all this expensive content. So here is straight from AI, the summary of how Netflix has raised their prices. You see the standard plan, 2014, $7.99 to $8.99. And here we are more than 2025, and prices have basically doubled in the last 10 years. It's had a huge impact on the earnings that just came out recently, right before I record this video. Amazing statistics, 300 million subscribers, and the number of subscribers keeps growing even as the prices keep going up. So 300 million paid memberships. What about earnings? Earnings per share, higher. Revenue, higher. Paid memberships, higher. They raised the revenue expectations for all of 2025. So you've got all this good economic news going on, even though they're raising prices. This discussion of Netflix now leads into how do they afford all the capital investment to make all this programming? So let's talk about capital budgeting by doing a simple example. So you can imagine that if Delta is redesigning a plane, they're going to pay $10 million out of pocket up front. They're going to have an annual increase in cash of $2 million, and their time horizon is 6 years, meaning that from investment time to recovery time is 6 years. And we got an annual inflation rate of 5%, which you can think of as an acceptable rate of return. So what you see in this chart in the cash flow analysis, in year zero, they pay out 10 million. And each year they're able to make 2 million back from the improvement they made in the cabin because they have more seats and they have more revenue. And so if you just multiply across, you adjust for the time value of money, that as we go out in years, the time value of money gets less and less. You can see in red that fraction, that decimal is going down each year. And we get to the end and we add it all up and we find out that the present value of the sum of the cash outflow and all the cash inflows is a positive number, which means it makes financial sense to do the project. What's going on at Netflix is the cash inflows are increasing all the time. They get more and more and more cash inflows from subscribers. So because they get more and more cash inflows, they can afford to pay higher and higher outflows for more and more programming because they can recover the cash faster and faster. So it's a flywheel. They get more subscribers, higher prices, more revenue. They can spend more on filmmaking, and then they recover the money faster when there's more films and more people watch, more people join Netflix, and it is a flywheel, it is a circle. So that gives you some idea of how Netflix is able to afford all this great content. So the takeaway here is if you can create a product or a service and drive higher earnings, higher revenue, that becomes a flywheel because you have the ability to recover cash sooner from investments that you make, and that just grows and grows and grows. And that's the case with Netflix.